In the West, we often think of big corporations as these giants that rise and fall. They have their moment, and then they're gone. But in a huge part of Asia, power works differently. It's not about the stock price. It's about generations. It's a bloodline, a legacy that's built to last forever.
And this really gets to the heart of the difference. On one hand, you've got corporations that answer to shareholders, always chasing the next quarterly report. But on the other, you have these dynasties, run by a patriarch, where power is passed down like a crown. And the thing that holds it all together? It's not money, it's loyalty.
This quote just says it all, doesn't it? Behind some of the biggest brands you know is a story that's all about survival and family duty. The business isn't separate from the household, it is the household, with its own set of unbreakable rules. So to really get how these families became so powerful, we're going to walk through their story. We'll start from the very beginning in the ruins of war. Then we'll look at how this idea of kinship capitalism actually works. We'll see how they went global, how they survived a total meltdown, and finally, what it all might mean for the future. Okay, let's dive in. Our story really kicks off in the middle of the 20th century. A whole continent is in pieces, and everyone's facing this one massive question. How on earth do you build an economy when you have absolutely nothing? I mean, just think about it. After World War II, all the normal institutions were just gone. Japan was destroyed, China was in the middle of a revolution, Korea was literally split in half. So in all that chaos, who do you turn to? Not the banks, not the government, they barely existed. You turn to the only thing left standing, your family. And that right there, that's the absolute key. When there are no contracts, no courts you can rely on, business has to be built on personal relationships. Getting a loan from your cousin wasn't just some transaction, it was about family honor. Your name was your credit score. And this trust, which was born out of pure necessity, became the foundation for a whole new way of doing business. So out of this web of blood ties and personal obligations, a completely new kind of capitalism starts to take shape. Where the West had the invisible hand of the market, Asia got something else, the very, very visible hand of the patriarch. And here's where it gets really fascinating. This informal system actually became formal. In places like South Korea and Japan, governments basically made a deal with certain families. They said, we'll give you protection, loans, and the licenses to build. In return, you give us loyalty, you run things efficiently, and you grow. Now, to protect these new empires, the families had to get creative. They built these incredibly complex business structures with one goal in mind: make sure the family never, ever loses control. They wove these webs of ownership that were so tangled, no outsider could ever hope to break in. Okay, so check this out. Here's how it works. The family trust owns Company A. Company A owns most of Company B owns most of Company C, and then Company C owns a piece of Company A. See? It's a closed loop. It's like a financial fortress designed so that control can never ever escape. It doesn't matter what the official paperwork says about ownership percentage, the family's grip is absolute. And yeah, this quote just nails it. The patriarch might look like he only owns a small piece of the pie, but through these structures, he controls the entire thing. This system is built for one person to be in charge, period. And get this obsession with control goes so far that it actually redefines what family means. To make sure the business lives on forever, some founders in Japan and Korea will literally adopt their successors. And we're not talking about a child. We're talking about a top executive, maybe in his 50s, who gets legally adopted to carry on the family name and the empire. In this world, loyalty can truly become blood. All right, so let's fast forward to the 1980s. These family-run giants, the chaebols in Korea, the keiretsu in Japan, they weren't just rebuilding their own countries anymore. They had become global powerhouses, the ones building the ships, the cars, and the electronics for the rest of the world. And this brings us to a huge cultural difference in how business is done. In the West, nepotism is a dirty word, right? It's a flaw. But in this model, it's a feature, not a bug. It's basically an insurance policy that guarantees loyalty. And because they didn't have to worry about angry shareholders every 3 months, these families could make huge, risky, long-term bets that most Western companies just couldn't stomach. And the scale we're talking about is just mind-blowing. To give you an idea, at one point, one single family group, Samsung, was responsible for about a fifth, 20% of all of South Korea's exports. That's one family's fortune tied to the fate of an entire nation. Or take Hong Kong. There, just 4 families control more than half of all the prime real estate in the city. In a lot of these places, the dynasties basically became a stand-in for the government itself, providing everything from jobs and apartments to roads and hospitals. So by the time we get to the late 90s, this whole system seems totally invincible. But there was a hidden weakness. Being so interconnected and relying on just a handful of powerful families created a huge risk. And in 1997, that system was about to face the ultimate test. It all started in Thailand. Their currency collapsed and panic just spread like wildfire. All that foreign money that had poured in and created the Asian miracle, it vanished practically overnight. Companies that had borrowed tons of US dollars suddenly saw their debts double, and entire economies were pushed right to the edge of collapse. And this is where you really see the power of this model. Foreign investors, answering to shareholders thousands of miles away, sprinted for the exits. But family capital, answering only to the patriarch, it stayed. And it didn't just stay put, it saw the crisis as a massive opportunity. So how did they survive? Well, remember that financial fortress we talked about? This is when it paid off. Their survival wasn't just luck, it was part of the design. Their assets were spread out, so if one company went bankrupt, the valuable land it was built on was safe inside the family trust. Another holding company, maybe run by a cousin, would swoop in and buy up the bad debt for pennies on the dollar. The crisis was like a forest fire. It wiped out all the weaker competition, and the strongest dynasties came out of it bigger and more powerful than ever. So after all the dust settled, it was the same families still on top. But now, their empires were leaner, meaner, and often run by the next generation, the kids who went to Harvard and Stanford. They came back speaking the language of global finance, but they were still completely loyal to the old family code. And the endurance of this model is just incredible when you look at the numbers. Think about this. Since 1980, more than half of the companies on the US Fortune 500 list have vanished. They've gone bankrupt or been bought out. But the top family conglomerates from Asia from that same time, almost every single one is still around, and most are stronger than they've ever been. But maybe the biggest legacy, the real kicker, is that this Asian model isn't some strange exception anymore. It might just be a preview of what's coming. In a world with more and more inequality, we're seeing wealth get concentrated into dynastic families everywhere. You've got the Waltons in the US, the Arnolds in France, the Murdochs in media. This model is going global. Which really leaves you with one final big question. The West spent the last century building systems, corporations, laws, markets that were designed to outlive any single person. But Asia focused on building families that were designed to outlive any system. And in a world where our institutions can feel pretty shaky, maybe that's why these dynasties have lasted. Maybe it's because they never fully trusted the system, so they built their own.